On today's episode, we are going to take a look at what happened in the market today. We're also going to take a look at some stocks that went up pretty big due to some news, and those companies are going to be Uber. We're going to take a look at Tesla, Amazon, and Square. All of them have moved up dramatically today, so we're just going to take a look at what happened. So let's get started. All right, so like I mentioned today, so the first thing, let's just take a quick recap at what happened in the market. The SPY was up 1.5%. Just the overall market, just from the Dow, the S&P 500, the Qs, the overall market was just up today. And it was because there were actually a few reports to actually enable this bullish behavior. The first thing is new economic data was shown today that showed a much stronger rebound in the United States server sector activity in June, which obviously due to the whole COVID-19, everybody was expecting it to be a lot worse, but it was better than expectations. So that helped out a lot. So not only here in the United States did we see some great gains, all around the world, global equities were higher in Europe and Asia. In Asia, there was a Chinese state-run media outlet that kind of suggested the country prioritized fostering a healthy bull market after the pandemic. So this was pretty much in how many people are viewing this. It's, hey, China's telling its citizens to go buy some more stocks. We're in a healthy bull market right now. So it's kind of a pump into the market. But I don't see much different from the United States and using the Fed to make sure everything is going good right now with liquidity. So, right, United States has the Fed, Chinese has their media and all their citizens out there. And continue, right, globally, In Europe, Germany factory orders rebounded 10.4% in May after falling sharply during the lockdown in April. The increase was driven by both domestic and foreign orders as economic around the world begin to reopen. So that shows we're seeing great results here in the United States with United States service in June being a lot better than expected. We have here in Europe and Germany showing that the Germany factories are a lot stronger than expected compared to May. And then we're also seeing the Chinese outlet pumping their market, telling their citizens that, hey, it is a healthy market. So those are some of the major reasons we saw a big gain today. But some of the biggest winners today were obviously the Chinese stocks. We can see, for example, some of my favorites. Baba was up 7.43% for the day. And we also have another one, Huya, that I talk about a lot, was up 15.3%. We also have ones that I don't follow, but I saw were trending. Neo stock was up 22.7%. So it was definitely a great day for anyone that is long in the market. And I just want to do a quick overview of my account. On June 15th, my account was sitting at about $38,900. Right now, I'm up actually about $4,000 just a month, not even a month ago. Right now, I'm sitting at $42,900. And here are some of my top 5 winners. These are actually my top 5 winners of my account. And the Huya is one that just entered the top 5. I forget what was there before. Right now, number 1 is Fastly. Number 2 is Activision. Number 3 is Spotify. Number 4 is Huya. And number 5 is PDD. And if you look at all these percentages, these are all, look, Fastly up 136%, Activision up 43%, Spotify up 76.5%, Huya up 31%, and PDD up 134%. So if you guys are new to my channel, if you are a long-term investor, if you are an investor that wants to learn more about growth stocks and growing the portfolio with multi-baggers, make sure to hit that subscribe button. And if you ever want to get in contact with me, make sure to post on the comments. I'm very active on the comments, but I'm also very active on Twitter, and I do have a Discord channel, which is free to anybody that wants to join. All the information is down below. All right, so the first company we're going to take a look at is Uber. Uber is up 6%, and this is ticker UBER for those that might not know it, and if you're listening to the podcast. So the main reason Uber is up today is they just announced a deal to buy Postmates for $2.6 billion in an all-stock deal platform. And this is pretty dumb to say, right? I would consider this a strong acquisition. And the reason I say this is there's plenty of times when a company purchases or acquire something else, and it's one that doesn't make sense. But I do believe that Uber and this Postmate acquisition makes perfect sense for the way Uber wants to go. So if you guys don't know, Postmates is also in the delivery system, just like Uber Eats. They don't just do restaurant deliveries, they do all types of deliveries and to all types of commodities. So by Uber purchasing them, it increases their overall market in this e-commerce delivery system that we have going on right now. So I do think it is pretty bullish for Uber. And like I said, right, it increases Uber's market share in this delivery system. And right now, Uber is mainly known for its ride sharing, right? And ride sharing at the moment has taken a hit because of COVID-19. But Uber Eats in Q2 saw an uptick of about 100% compared to same time last year. So even though one part of their market is kind of doing bad, they are trying to grow that other part of the market that is doing pretty strong. Right now, unfortunately, Uber sharing rides makes up a huge portion of their revenue compared to Uber Eats. But hopefully with this acquisition of Postmates, it'll be able to try to even out that type of revenue. And just right now, right, with all these grocery delivery systems, it is at a great place to increase its market share here. All right, so the next company we're going to take a look at is Tesla and some of its competitors, if you want to say. Tesla was up about 13% for the day. Some of its competitors, NIO, was also up 22%. There were other ones, Workhorse, which is down 15%, and Nikola, which was down about 14%. So why are these guys trending right now? Tesla is mainly up due to, or later last week, Tesla announced that its production numbers were a lot better than expected, and this sentiment just continues to drive a bullish mark to Tesla. Another thing is today, even the biggest bear of Tesla, which is this guy named Ryan Brickman, who is an analyst at JP Morgan, raised his stock price target by 7.3% for Tesla. Unfortunately, that price is only $295, and that's pretty crazy, right? How different that gap is between the analyst target price and the actual stock price at the moment. But not only that, the other reason is NIO. They reported that their June sales were a lot better, and is saying that, hey, Chinese market is reopening again, automobile market is opening again, which is again another bullish sentiment to Tesla. And actually, I also wanted to take a look at another vehicle company, and that's NIO. And this is not NIO, this is NIU. And this is one that I've actually talked about this past weekend, and one I talked about earlier on Thursday or on Wednesday when I was talking about some new growth stocks. This one was up 21.15%. And if you guys want to learn more about that, feel free to check out my other videos. Another bullish sentiment for Tesla are these Tesla shorts. So Tesla right now, with the stock price just jumping, Elon Musk, may I say, is one of the funniest and biggest trolls I've ever seen in such a high place, right? This guy is the CEOs of many companies and still had the humor and the trollness of this happening. I think it's pretty funny. So he just released, and they're actually sold out, some shorts, which he's priced at $69.42 at the zero, so on 420, which is everything that Elon Musk is known for, right? The biggest troll. And on the back it has the Tesla logo. In the front it actually has the Tesla logo, and in the back it says sexy. So again, this is crazy. They are actually sold out in every size. I honestly don't know if this is an item that was actually stocked. So if anybody picked them up, this might actually be a great investment. Actually, if you bought some, I would definitely put them away and sell them in a later time, where that might be the greatest investment ever. The next company we are going to take a look at is Amazon. Amazon broke its $3,000 price mark. Right now it's sitting at $3,000.57. And this one is up about $5. It's up about 5%, close to 6%. And this is crazy. And one thing I keep hearing a lot is people are saying, oh, hey, Jose, the stock market is overvalued. Hey, Jose, all the companies you mentioned are overstretched. And how can they be higher than the stock price they were in February 20th? And to those people, I say, hey, continue holding to your cash. For me, I put my money to work, and it's doing really great for me right now. Unfortunately for me, I'm a long-term investment. So if I do get a random burst in a bubble, I'll be able to pick up more shares of great companies that I enjoy. But one thing that I definitely want to say is give facts of why I believe these companies, for example, Amazon, PayPal, all these clouding companies are increasing dramatically. Right now, we're just going to take a look at the e-commerce market. So here I have a chart that shows where the e-commerce share will be compared to retail. So in 2017, 10.4% of retail sales will come from some form of e-commerce market. In 2018, it would be about 12.2%. In 2019, it will be about 14.1%. And in 2020, it will be somewhere around 16.1%. So what that means is in 2020, roughly 16% of total sales would come from an e-commerce market. Now, let's take a look at how the data actually looks. In 2019, we were around 16%, which is what we were expected to be in 2020. So hey, we're about a year ahead of schedule in 2019. But look, at the end of April 2020, 27% of the total sales came from an e-commerce market. If we take a look at this chart, 27% doesn't even come here in 2023. And if you're increasing about 2% per year, about 200 basis points per year, so in theory, 27% would have been seen in 2025. So the amount of growth that these companies are seeing would have taken 3 to 5 years in the future, and they did it in such little time. Why wouldn't the stock price go up dramatically like that? Look at this. Is all you need to see, right? We were expected to have 22% in 2023, and we're seeing 27% already in 2020. I do believe when things continue to go back, we might see some form of rubber band effect where it will drop back down to some lower levels than 27. But I don't think it's going to be, I still believe we're still going to have that big gain. And for example, Amazon said it in their earnings report that they have not seen this type of gain. It is ridiculous. And right now they're spending money to make sure they bring even more market share. PayPal said it that they've seen growth that they thought they would see in 3 to 5 years, what they see now. So why would these stock prices be the same as they were in February 20th? And now the last company we're going to take a look at is Square. Square right now is up about 5% for the day, and it's sitting at a close to $119. So what were some of the, again, Square is one of those companies I was just mentioning about. So if you guys don't know, Square pretty much makes, the main reason Square is going up right now is because of their Cash App. So their Cash App is a very similar peer-to-peer payment transfer monetary app, very similar to PayPal, very similar to Venmo. And right now, this, due to the current market, very similar to PayPal, very similar to Amazon, the amount of growth of users they've seen here is ridiculous. So right now, we're going to see that earlier today, SunTrust predicted that the company would begin to take direct deposit business from banks. So this is pretty crazy. They're saying that Square is trying to become more of a digital bank, and this is not the first time this is happening, right? With the whole COVID-19 and the small business loan given out by the federal government, Square and PayPal were some of those that were actually allowed to do this. And it actually brought them into that form of banking market. Another thing is right now, for example, with all the, not only the small business loans, but all that stimulus checks that were coming in, Square was also able to give these, do this types of transaction through Square. So it's bringing a lot more users, and it's bringing more of a digital banking. In their business sector, they also have some form of lending to businesses. They have their own type of loans that they give out to businesses that they work with. So this digital banking for Square is something that many people are talking about, and I can actually see moving forward. In this article, for example, they mentioned that the app's direct deposit volumes roughly tripled from March to April as many customers use the app to receive government stimulus payments. And as things continue to grow, I do believe that these payment peer-to-peer applications are going to continue to do good. So that's it for today's video, guys. I hope you guys enjoy it. Like always, make sure to hit the subscribe button, the thumbs up, and the bell. It helps the small channel out so much. Take care, guys. Have a good night, and see you next time.